CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Well, let's talk to a company now which has really outperformed this year. So on a year-to-date basis, the Nifty Pharma Index is up around 28% as compared to, say, Lupin, which has outperformed quite significantly. Lupin, the stock, has given returns of around 70% on a year-to-date basis. We have with us the management. We have Mr. Ramesh Swaminathan, who is the Executive Director, Global CFO and Head Corporate Affairs, joining in to discuss the business as well as the way forward. Mr. Swaminathan, welcome to the show and thank you for joining us on a day where we are celebrating 24 years of existence. Wanted to start by asking you about the US business, because I was just reading a Kotak note that came out this morning on your company. And one of the things that they have mentioned is that, you know, the US business can probably hit $1 billion to $1.2 billion in terms of an annual run rate of sales. When do you expect that to happen, and which would be the key drugs which would contribute to that revenue target?
At the outset, thank you for having me on, and congratulations to CNBC and happy anniversary. Regarding US, as you're aware, we were pivoting to more complex generics over time. We have been actually focusing on this for the last several years, so to speak, but it's time to actually to harness that. You're right about the fact that we are looking at about $1.2 billion over the next 4 to 5 years from US itself, which is a quantum jump from what we are doing currently, which is about $750 to $800 million. The current run rate is about $200 million. This is on the back of, in fact, several good products that are coming through. As you would know, we launched Tiotropium, which is doing fairly well, as with Albuterol. The entire respiratory portfolio will continue to do extremely well for us over the next 5 years. And you could expect the same thing from potentially the injectables, the complex injectables that you'd be launching. So we have been focusing on that, and we have, in fact, a good pipeline of those products as well. So the next 5 years, we would be kind of unleashing those products into the market. We also have a fairly decent pipeline when it comes to ophthalmic products and biosimilars, which you could be bringing into the market. The OST portfolio it's not as though it's going to be lower from a focus perspective, but it'll still contribute a fairly decent sum overall. So if you fast forward 5 years, you could expect about $250 to $300 million to come from respiratory, about $250 odd million from our injectables, and the balance coming in from ophthalmic and potentially biosimilars, and of course the OST portfolio.
So $1 billion in the next 5 years, that's how we take it. Mr. Swaminathan, thank you so much once again for joining us. Just wanted your thoughts on Spiriva generic. How is that ramping up for you? I mean, analysts have estimates of anywhere between $130 to $160 million worth sales coming in the next 2 financial years. Can you surprise them positively?
It's coming up very well, and as you would know, there is no generic competition to this. The jury is still out as to whether there would be an authorized generic at some point of time, but it isn't there at this stage. So we would continue to do well for the next at least 2 to 3 years insofar as this particular product is concerned. I would actually say that the entire respiratory portfolio is shaping up pretty well for us. As you know, we have, in fact, products outside America also. So we are looking at this as a global platform across various of the markets. And it's an extremely important portfolio for us. And we would do all that it takes to bring in the entire range of products out there. And we believe that we have the wherewithal to bring in a full range out there over time.
Just a quick 2-part question. Suprep, there is competition which has come in because Strides has received approval for that particular drug, as well as your view on margins, because now you're, tracking 18% already. What are you probably exiting the year with?
Yeah, so insofar as Suprep is concerned, you're right. There is generic competition coming in from Strides. So to the extent the franchise will do, and that's true with any generic product. So there is a big upside on launch, and then it lasts for some time, then it comes down, and that's true with Suprep as well. The second question relates to margins. As you would know, we have been focusing on improving our margins. It has been lower than our peer group for quite some time. And over the last 5 quarters, we have, taken several steps to kind of take it up, successively, so to speak. And last quarter, we actually ended up at 18.7%. We do believe that there is, enough steam to kind of take it forward, successively over the next several quarters as well. The focus, of course, is on, moving the top line with a lot of good products across various geographies, including America for sure. We've added about 1,000 people in terms of sales force in India, and that would potentially start delivering a lot more, in the second half, so to speak. And there's, of course, a tremendous focus on keeping costs on a range, so to speak, which all of this has contributed and will continue to shape our future as well.
Just a quick last word, and if you could just, answer monosyllabically, next year exit run rate for margins?
It'd be much higher than what it is today.
22, 23%?
The intention is to get it to 22% over time, but it will happen for sure.
Okay.
All right. Thanks a lot for joining in on a special day, and on many occasions in the past. Every time we've reached out to you, you've been generous with your time. Mrs. Swaminathan, wish you good luck, and hope that our association continues for the next many years as well. With that, we'll slip into a short break.